Hi, this is Zach here with the US Chartbreakers here at Zach's Traders Cafe for Sunday, the 27th of July. Starting off with the S&P, and here where it's basically up and away, very steady progression, hardly any pullbacks at all. The channel there from April has its floor around the 63.30 level, so if there is a rug pull, then that would be the first destination. Second one would be the initial July resistance around the 62.90 level, but at the moment looking upwards rather than downwards, and 66.50, the top of that channel, could be delivered sometime by the end of September, or at the current rate of progress even sooner than that. Worst case would be the mid-July floor there towards 6200, but as I said, the previous levels 62.90 and around the 63.30 level really more realistic at the moment, barring any tariff turmoil. The next stock, the next market on the list is the Nasdaq, and here again that steep post-April rising trend channel. We've had the 24,000 level at the top of that channel as the potential destination, and that would be on tap hopefully for by the end of next month. In terms of support, 23,000 and just below the old or the initial July resistance, 22,900. So that area, really the potential area for any setback in this market. And if things go completely pear-shaped, obviously we've got the 50-day line there, 22,100. But at the moment, quite well ensconced within that rising trend channel. Moving on to the stocks, and starting off with the stock which has already become something of a favorite, AEye Inc., largely because it didn't dip as low as we were fearing. So on Thursday, the suggestion was $2, or rather $2.42 would be a potential support point there. That was resistance on the way down, but we managed to find support well above that, and in fact close above the January peak there at around $4.30. And the message there is that this time, rather than selling into strength, the market is actually supporting the shares, and we could get up to as high as $6 by the end of next month or even sooner, which is the upper parallel of that rising trend channel from basically the early part of last year. In fact, you could argue that we could even have a higher destination than that if you take the old April or May 2024 peak for the stocks, and that's heading for $6.80. Next on the list is another stock which we've looked at quite recently, and it comes in the form of 180 Life Sciences. Here you can see that we've got a mid-move consolidation, or a likely mid-move consolidation. We've got the 50-day and the 200-day lines both rising, with the 200-day line the key here above the recent resistance there around $2.80, looking for this stock to at least get up to the top of that rising trend channel from the end of last year as high as $4.50, and to do so by the end of next month. New name, I think, for us, Aureus Greenway, and here you can see that a bit of a breakthrough here in terms of closing above the 200-day line around $2.30. Above that, looking for $4 by the end of next month, and what looks to be a rather extended U-shaped turnaround for this particular stock, but very strong price action there on the right-hand side of the chart. On to Bragg House, which we haven't looked at before, but here we've got a W-shaped turnaround, rather extended W-shaped turnaround. The mid-June peak there around $1.30, and above that on an end-of-day close basis, looking at the top of the channel there as high as $2.80, and the 200-day line by the end of next month or even sooner. On to Coursera, and here you can see that we've had a massive gap to the upside towards the top of that channel there, which is heading for the $15 area. We're looking for that, especially while there's no end-of-day close back below the one-year resistance around $11.75. So hopefully that's a nice risk-reward setup for those who are in the mood for chasing a gap to the upside. We've looked at Carbon Revolution quite a few times in the recent past, and you can see that after the initial pullback there, bull trap there towards the $6 mark, the shares are back in business again. We're above the May peak there at $4.75, and while we're above that, looking for quite a direct move to $8 on the top of the rising January trend channel by the end of next month. Double bounce near the neutral 50 level, so barring any breakback below the June resistance at $4.10, we should be on our way with Carbon Revolution. On to another stock which is looking as though it means business for the bulls, and it's Collectis. You can see that we gapped higher during the week and closed above all the recent resistance, basically $2.43 plus. Above that, looking for the top of that wide rising trend channel from June last year, as high as $3.20, and looking for that by the end of next month. The other sizzle on this chart is the way that we've had about 6 RSI 50 rebounds since the end of June, so this does look as though it's pretty strong stuff indeed. FingerMotion is next, and it was a bit of a hero for us back in May, but rug was well and truly pulled. The shares fell back to the December uptrend line there around $1.46, and above that we are looking for a move to the top of the channel, $2.70. If you're cautious, you probably want to see an end of day close above the 200-day line around the $1.89 level. On to a stock which is GIBO Holdings, and here you can see that the rug definitely pulled here, rather painful way, but there are some signs of a turnaround, i.e. potential rising trend channel base with those days bouncing off that uptrend line from last week. Top of the channel there at the moment looks as though it is around the $22, $23 level, something we would be looking for by the end of next month, while we can stay above recent neckline resistance around $5.30. Moving on to the last few, and starting off with a situation which is looking as though it's ready to change its trend. Here we've got Roadzen, and the 2-day close above the 200-day moving average. The other point to note is that the 200-day line is now rising with Friday's price action wholly above that, which is normally quite impressive. That means, or that suggests, that we're looking to $1.90 in the top of the January trend channel by the end of next month, or even sooner, especially while we're above recent post-May resistance around $1.30. On the list next, the penultimate stock, Scholastic, and here gapping up after gapping down then back in December, so it's Bear Trap Island reversal, one of the strongest setups. That means we are looking for the shares to actually make a beeline towards the October gap there at $29 or just shy of $30. Hopefully they will do that, or the stock will do that in the next couple of weeks, backed by 2 RSI 50 rebounds in the recent past, and a few there back in June. So it looks as though this is pretty strong, and hopefully $30 plus over the next couple of weeks. Finishing off with something perhaps it's not quite so spectacular, but still of interest, VCI Global. Here we've broken out of a falling wedge for the first time in many months. The nominal level there around 94 cents. And above that, we're looking with the shares to fill the gap up to $2.20 and hit the 50-day line in that area by the end of next month. So quite an interesting setup there after being so oversold. That's it from me today. More updates during the week.